Consumers may be cheering cooling inflation overall, but one segment just got hit with a 1-2 punch. Travel airfares broke a 5-month streak of declines, rising almost 4% in August, while lodging away from home was up 2% after just a fractional gain in July. That's got the travel names under some pressure. And my next guest recently downgraded Booking Holding on moderating room night growth, seeing headwinds across the online travel sector, even if the economy has a nice soft landing. John Colantuoni is here. He's an internet analyst at Jefferies. John, it's good to see you. And why are these not the best of times for names like Booking?
Well, I think it's really all about consensus. What we believe is that the numbers are simply too high. The Street's modeling in the same level of growth this year as 2026, so no deceleration in room night growth. And that's despite our outlook for the broader travel industry to see growth roughly cut in half.
Wow.
So there's sort of a growing differential between the trajectory of bookings growth, at least modeled by consensus in the broader travel industry. And with the stock trading at the 10-year average, we don't think it's pricing in that risk.
Is it forward
so we decided
around...
to come off of our buy rating.
No, that makes a lot of sense. And even when I hear this specific case, I think to everyone who says, well, you know, earnings estimates are going higher next year. It's going to support the broader market. And I think, I don't know, maybe not in this sector.
Yeah, I mean, think about the travel sector. We had the pandemic, and that drove pent-up demand over a multi-year period. And then the unlock of that pent-up demand and recovery in the travel industry drove elevated levels of growth for the past 3 years. And what we're seeing is effectively a normalization of that growth. But I don't think that consensus numbers have quite caught up to the deceleration that we should see over the next few years.
Is this just a deceleration kind of to be expected? A number of industries have gone through this difficult transition where the numbers are declining. That doesn't mean that the businesses are fundamentally in trouble, just like you said, that expectations are too high and the pandemic era was unsustainable. So what do you think Booking should be trading for in a normalized environment? What is the earnings power?
Yeah, this is still a very high quality business that is going to gain share over time. This year, we expect across the globe, ex-China, for room nights to grow 4.7%. In 2026, we expect growth of around 2.5%. So Booking will grow faster than the broader travel market. So think of this business as sort of a mid to high single-digit bookings grower with some margin expansion and a lot of free cash flow that they can use for share repurchases. So we still think that this business can deliver 10% plus EPS growth for the foreseeable future.
Yeah.
That being said, if there's downside to room nights, it flows through down the P&L and hits every single component of profitability.
What is your expectation for the travel sector? Is it going through a soft landing, a recession, you know, a reset? How should we think about that for the next couple of years?
I think it's a little bit too early to know for sure. I think you're starting to see some commentary from the hotel chains, from the OTAs, that suggest some indication of softening. I think just because of how early it is, it's hard to know whether that's just the normalization of growth or whether that is the flow through of some softening of the consumer that we've seen in some of the lower income cohorts. I think maybe one theme that's been consistent across my entire consumer internet coverage is that the sort of the higher income consumer, the luxury side of things, continues to move along very well.
Yeah.
It's sort of the lower end where we're starting to see some weakness. So our broader recommendation across our coverage is that you want to be aligned with companies that have a consumer skew towards the higher income.